All right. Hey, we're live. Let's hope I can figure this out. Luca, thanks. You'll probably have to edit this first part out. Hmm. All right, I'm going to talk about
All
today's.
right. Hey, we're live. Let's hope I can figure this out.
Oof, that was a rough start. It was absolutely rough start. All right. Well, just kind of push forward and see what I can work out. So I did a quick podcast with two of my agents from Anchor Up Real Estate yesterday, in which they were talking about some of the big VA questions that they had as agents and listing agents on the other side, meaning the people who are collecting your offers and reviewing them for the sellers. So I wanted to just quickly highlight some of the myths that are or misconceptions that are out in the marketplace about VA loans and really highlight some and identify why they're not true and provide some clarity on what it is that they do. Uh, Here at American Pacific Mortgage, we're really good at VA lending. You know, most direct lenders and brokers are going to have really strong government products, meaning VA and FHA loan. That's really where I want to start talking about what a VA loan really is for a direct lender. Right, we're really incentivized to provide quite a big push on government lending as far as FHA and VA loans, and I can talk about why for the lender it's just it could simply come to profitability. For me, it comes down to the type of people that I'm working with. I love helping veterans, first time home buyers, FHA buyers. That's my jam. You know, I'm not a suit and tie type of guy. I wear a t-shirt every day. If I would want to look good, I put on a polo. But otherwise, you know, I wear a Walmart t-shirt with some Levi's. That's just who I am. Hopefully that never changes. And that's the type of people I like to serve, hardworking, blue collar. You know, I'm told I'm a blue collar man with a white collar job. And that's really the type of people I want to influence and help provide housing. Not to say I don't stick my feet in the big jumbo markets, but even when I have played in the $1 million homes, it really has come with a VA loans, and I've gotten really good at the super jumbo loans with through the VA side of it. And so I'm going to be sharing my screen, kind of just talk a little bit of some of the myths. This is a graphic that was designed by APM's marketing team, and let's see. Cool. So what you're able to see here is you're able to see the myth and facts of what VA loans are. And so the first is the funding fees. The funding fee for a first time use. So what a funding fee is essentially insurance. So on a conventional loan, if you don't have 20% down, you're gonna be force placed mortgage insurance. I'm gonna have lenders say, "Oh, we have the ability to do less than 20% with no MI." Yeah, but what they don't tell you is it just gets added to the interest rate, or you do an upfront premium, and then you give a credit, again, hiring the rate to be able to cover the MI, which in some cases it really is a benefit. Recently, Rocket Mortgage, who I'm also a broker for, released a special product where if you put 15% down, you didn't need MI. There was a really good opportunity. I think we leveraged it a couple of times. But for the most part, I want to stick to VA. So what a funding fee is just that. It's like insurance from the Veterans Housing Administration to be able to insure the loans against default. On a first time use, it's 2.3%. And anytime you use your VA loan after that, it's called the subsequent use, and they're going to charge 3.6%. So if you have $1 million home, 2.3%, 23,000, right? And so if they use it a second time, that's 36,000. What does that equate to on a monthly payment? It doesn't equate to very much. My general rule of thumb, with higher interest rates, so you're probably looking at about $60 a month for every 10,000. This is an exact science, right? Someone calculates it and be like, "Oh my God, it's really 58.6 or 50 or 62.3." Like, no, this is just a general example. I really use it when we're looking at condos with HOAs and how to offset purchasing power. I think $60 for 10 Gs. That's a good rule of thumb. As rates go up, that number is going to change a bit. But the VA funding fee. So let's just say you bought a $500,000 home, and so your down payment was your funding fee was 11,500. right? Well, that's only going to change your payment probably by about $70. If you were to do mortgage insurance, even if you had an 800 FICO, if you had an 800 FICO and came in with 5% down, you're still looking at MI at about $100. So regardless, this funding fee is going to be a lot less expensive to amortize over 360 years. I'm sorry, 360 months. So it's just very minimal. Now, if you're in the process of getting a disability rating, once you get your disability rating, the VA will actually refund that money back to you. So I just had a case right now, it's $1 million deal. I talked about it with my buds over at Anchor Up. A gentleman funded for $1 million. I believe it was actually 975, and called me up, said, hey, I got my disability rating about 3 months after we closed. We got him in contact with the regional office in Phoenix, and they shot him a check for almost $36,000. It was fantastic. It was such a win. But if you if you separate from service and you have a disability rating, and I think I said 25% or more, but I think it's 10% or more, or you're a Purple Heart recipient, you'll go ahead and get that funding fee waived. So when I pull your certificate of eligibility, we'll be able to see on there if you're exempt from the funding fee. And if you want me to pull a certificate of eligibility and check to see if your disability rating is able to qualify to have your funding fee exempt, just go ahead and shoot an email to Tony, Tony.Pelayo, Pelayo at apmortgage.com. Again, Tony.Pelayo at apmortgage.com. Shoot me an email. I have one of my team members get in contact with you. We'll get the information we need. We'll put a certificate of eligibility. Of course, this will be cost-free for any listener or viewer. So funding fees, VA funding fees, not going to make your payment unaffordable. In most cases, you're not even going to have to pay for it. You have disability rating. You're all set. Okay, timelines. My VA loans take less than 21 days. I close VA loans really fast, including VAs that don't even qualify with some of the other lenders, some of the bigger banks. They're manual underwrites. You can't get a desktop underwriting approval because you have a FICO at 580. That's a minimum FICO score here at APM. Some lenders will go down to 500 with a small down payment, but if you're at 580, let's just say you have some tough things on your credit, but you're a decent income earner, right? Even no matter what, just the VA guidelines are really underwritten in favor of the veteran to be able to help them get their home loan. And because of it, you're going to be able to close quite quickly, in some cases faster, in my opinion, than FHA and VA and conventional financing. Again, just because the guidelines are underwritten in favor of the veteran. And also the underwriters, and I can only speak about my own company here, my own experience here at our company at APM. We do work in favor of the veteran. We're looking for a way to make it work. If there's a way, we're going to figure it out. And so timeline wise, we're going to close quickly. Appraisal is a big thing that, they think that appraisals are going to take 2, 3, 4 weeks. They don't. They take 10 days. One of the great things about the VA also is, like, if you have an appraisal, so an appraisal is an independent third-party inspector that's going to go out to the property. Their main job is to figure out, like, if you're buying a $500,000 home, is it worth $500,000? They do small safety and hazard inspections, but otherwise, it's a pretty simple. It's basically going out to make sure that the house is worth what you're paying for it. Again, they're going to make few safety inspections. Now, if you order the appraisal on day one, which we always do, like as soon as we get a purchase contract, that very day, we are ordering an appraisal. And one of the great things about VA loans, you don't have to wait for disclosures to be signed in order to order the appraisal, because we pay for it up front. And so it really gives us a head start. And on an appraisal for VAs, if you're going to have a lower value, the appraiser is going to give you 48 hours in advance. They call it Tidewater, which is essentially, hey, you guys, we're not finding value. Go ahead and find us some comps to try to meet the value of 500. We're at 480. And so that gives us 48 hours to combat it. This is all done within like 10 days. I've never had a VA appraisal go much longer, typically anywhere between 8 to 12 days, 10 days being the mean, and most of the time done well within. Foreclosures. I got a great story on a foreclosure. I had a veteran have his home foreclosed on years ago. He got divorced, had some bad credit, and he thought he had lost his entitlement. As a matter of fact, he was in the down payment assistance program when he got to me, and I coached them up on, hey, let's get your entitlement restored. He didn't want to go forward, went to a different lender. The other lender kind of told him the same thing, but what they didn't realize is some of his entitlement had been compromised, meaning he had lost some of his entitlement, some of his ability to borrow with zero down. They wanted him to use his VA loan, but come in with 10%. And called me up about 2 weeks before closing. I was able to get with the regional office in Phoenix, talk to someone there, get a good letter of explanation from the veteran, and have his full entitlement restored. Now, if you have a short sale, the VA is super hard on restoring your entitlement. They're going to have you pay not all of the sale, a portion of whatever you lost from your entitlement. So it could be 15, 20, 30,000. I just had one where it was 21,000 to get your entitlement restored. But in his case, he was able to get his full entitlement restored with nothing out of pocket. Again, the VA, I hear nightmares about going to the VA hospitals. But as far as their housing goes, man, they got it down. It's really, really in favor of veterans getting their home. Jumbo financing, there's no loan limits for VAs. You can go $2 million, zero down, as long as you qualify for the payments. They go based off residual income. I'm doing $1 million loan with a debt to income of 700, with 70 right now. I mean, it's nuts. Again, just really written in favor of veterans to get homes. And that's what any veteran that's watching this, that is my belief, that the VA loan is the best loan on the market. Not only is it the best loan on the market, but it's going to be the easiest loan to close. And so you're going to be able to get more purchasing power, lower monthly payments, lower interest rates. Overall, it's just better. And you can borrow up to 2 million, potentially more if you so choose, with zero out of pocket. You can use your VA loan multiple times. A strategy I like to use, and my vets have been with me for now 3-4 years, is we get their VA loan on their initial purchase. 2 years later, once they have the equity position, we're refinancing, putting them into a conventional loan, freeing up their VA loan, and now they're upgrading to the bigger house that they wanted, right? Again, you can go up to $1 million, $2 million. Veterans that started with me at $500,000. Now we're on the second go. We've refied, put them in a conventional loan. Now we're going to use their VA loan again. And now we're hitting that $1 million purchase price, which is where they want to be at. About a $4,500 mortgage payment, up to $45,000 to $5,000. VA loan cost, they're going to be just about the same as closing costs on any other home, right? There are some fees, there are some non-allowables that the VA is not going to allow us to charge. For example, if you're brokering a loan and you want to do an origination fee, you can't charge over 1% for origination. And so most of the time, lenders are going to do what's called lender paid comp, meaning the lender is paying the whatever commission the lender is going to earn. You do have a max allowables of 2% on something like that, and your overall fees can't exceed certain thresholds. I can go into the mathematics, but it gets confusing even for us on the lending side. And therefore, just know there's certain things the veterans can't pay for. It's nothing too crazy. It's nothing too chaotic. It just protects the veterans from overpaying. And so here's some general rule of thumbs. 500,000, you're looking at about 10,000. This is in California. Because property taxes are so high, you're looking at about 10 G's for closing costs. Of course, a good lender can look at a profile. If you don't have the 10,000, we can give lender credit to offset closing costs, bring it down to 5. Could get with a good realtor, maybe we bring it down to 2. Right. And we're able to offset a lot of these fees by just getting a little bit creative with the financing. Everybody makes a little less, but a veteran gets a home. That's always been our strategy. Active duty, absolutely. You provide an LES. If you're an active duty member, that's hands down the easiest way to get a loan. Like if you're active duty, you got a housing allowance. Typically, your housing allowance is going to be more than enough to cover your monthly mortgage, right? Especially if you're in the higher ranks, maybe E5, E6, right? You're now making $2,800, $3,200 for your housing allowance, and that's getting you a $500,000-$600,000 home. So 100%. If you're active duty, give us a call, shoot us an email. Let's use your housing allowance to build your wealth. So that's really, that's really some of the myths and contradictions out in the marketplace as far as how VA lending is structured, what VA loans are, and again, I consider myself an expert in VA lending. Um, this is really what I specialize in is government insured loans, VAs, FHAs, down payment assistance. I do mess with conventional. I do mess with jumbo financing. If you have any questions, my info's been on this flyer. Just put my direct cell phone number. It's probably not the best move, but I don't have a lot of viewers. So if I get one call out of it, that's cool. But if this hits 100,000, which that'd be nice, probably have to get a new number, huh? Otherwise, y'all have a wonderful day. All my vets out there, thank you so much for your service. Appreciate what you do. I work with a lot of veteran realtors, so shoot an email, shoot me a text, and I'll get you connected. We'll hook you up. If you're not in California and you're watching this video, still shoot me a text, shoot me an email. I'm also licensed in Washington and Tennessee. And if you're in another state that I'm not licensed in, we can definitely get you connected with somebody who I vetted and trust. All right, peace out, y'all. Let's have a killer day.